Thank you, Barry. I'm Maurice Barrett. I'm Senior Corporate Reporting Manager in IAASA's Corporate Reporting Supervision Unit. But before I get into my presentation, I just want to, Simon, I think, will put up the results of the Slido. And the question we asked was, have reporting timelines changed as a result of sustainability reporting requirements, or do you foresee delays in reporting timelines? And there is a slight vote in favour of delays. I'm actually somewhat surprised at that because I would have thought that there would be more yes answers on it. So it's kind of, it's 60-40, which surprises me a bit. I would have thought it would have been much more tending towards the delay. Now, I wanted to talk to you a little bit about giving you a corporate reporting update. For those of you who were at this event last year, I would have given you a financial reporting update, and the reason for the change from corporate reporting update the reason for change from financial reporting update to corporate reporting update is that during 2024, we have been given responsibility for the supervision of sustainability reports. So for those of our entity population that have to give sustainability reports for 31 December 2024, we will be looking at some of them as part of our 2025 examination season. I want to look at some topical reporting issues. I also will make reference to our observations paper, and I will make some short reference to the ESMA, which is the European Securities Markets Authority, which is the European-wide accounting enforcer, for want of a better description in this context. I'll be looking at what we expect to see in their Common Enforcement Priorities paper, which we expect will be published before the end of the month. Moving on then to sustainability reporting. And this sustainability reporting is probably going to be a bigger change, one of the biggest change to corporate reporting ever, and it probably is a much bigger change since the introduction of IFRS in the early 2000s. Sustainability reports or sustainability statements will be required by approximately 15 of our 100 or so issuers in Wave 1. And these companies will be reporting in their 2024 annual reports, and they will be within our supervision remit for part of our 2025 examination cycle. In summary form, our planned enforcement approach is that we will select 3 sustainability statements for examination in 2025. These will relate to, firstly, a financial institution, secondly, an industrial company, and thirdly, we have yet to decide which other company to select. So just to keep the surprise element there for you all. Our approach in year 1 is that we will read the sustainability statement from end to end. We will then request, in each of the 3 cases, an initial fact-finding meeting with management. And this is just so that we gain a deeper understanding of the approach adopted to sustainability reporting, its approach to compliance with the various disclosure requirements in the ESRSs, and our focus will then move on to the areas that we'll focus on will be double materiality and an assessment of the minimum disclosure requirements surrounding the various processes that the company has applied in meeting its sustainability reporting requirements. And we will also examine the consistency of the sustainability report with the financial statements. We're also going to request the checklist for the 1,200 or so data points. And this is something that audit committees themselves will also likely have considered when approving the sustainability statement itself. And we plan to coordinate our work with our audit inspection colleagues when they're doing their assurance examinations. We do recognise that, as Orla said, sustainability reporting is a marathon, not a sprint, and our processes will evolve over time as well. Moving on then to financial reporting topics. I will talk a little bit about our observations document later on, but there are some areas that were going to be on our radar for the 2025 examination season. And the first of them is the disclosure of the material accounting policies and the disclosure of the judgments and sources of estimation uncertainty. And a couple of points I'd like to make on this is that the disclosure of the material accounting policies and the judgments and the estimation uncertainty should be entity specific and should be consistent with the information provided elsewhere in the financial statements and in the management report. I'd also appeal to you to make sure that when disclosing your accounting policies in accordance with IAS 1, that those disclosures should not be simply a repetition of the wording from the IFRSs. Instead, the accounting policies should be tailored to the specific circumstances of the company. And the accounting policies should be reviewed periodically and updated as circumstances demand. As we read the full annual report when doing an examination, we challenge issuers where it appears that the front-end reporting is not consistent with the disclosures in the financial statements themselves. And looking then at the judgments and estimates, the financial statements should distinguish clearly between the judgments made in the process of applying the company's material accounting policies and that have the most significant effect on the amounts recognised in the financial statements. And for the techies among you, that's paragraph 122 of IAS 1. And that should be distinguished from the assumptions made about the future and other sources of estimation uncertainty at the balance sheet date that have a significant risk of resulting in a material adjustment to the carrying amounts of assets and liabilities within the next year. And that's paragraph 125 for the techies. Another topic that we frequently focus on is that of fair values, and particularly the levelling of those fair values. And we challenge companies as to whether fair values are in level 1 and based on observable inputs, or level 2, or are level 3 and based on unobservable inputs. I also want to mention at this stage that IFRS 18 was issued earlier in the year. It has an effective date for 1 January 2027. Early adoption is permitted, but it's not yet EU endorsed. However, implementation of IFRS 18 will require planning, and now is probably the right time to start that planning. It's likely to require changes to the format of the income statement. It may require some reconsideration of the management performance measures, or MPMs, or KPIs, or whatever you want to call them. And it might also provide an opportunity to have a fresh look at the overall presentation in the financial statements. We published a paper on IFRS 18 earlier in the year, and that's available on our website, and you'll see a hyperlink to it in a further slide. Moving on then to our observations paper, which was published at the beginning of this month and is up on our website. And again, there's a link for that later on in the presentation. This observations paper addresses both aspects of our responsibilities, i.e. sustainability reporting and financial reporting. On the sustainability statements, the observations paper sets out a short background to the requirements. It calls for consistency of the sustainability reporting with the financial reporting. It includes a number of links to some educational guidance and other papers that may be of use. And it also sets out an overview of our approach to sustainability statement enforcement. On the financial reporting end of things, the paper addresses accounting policies, segment reporting, fair values, impairments, contingent liabilities, fair review of the business, value in use, APMs, cash generating units, and some IFRS developments. And as you can see, this is a pretty broad menu of areas that we might examine in the 2025 reporting season. I urge you to read the observations paper. Some of the topics may not apply to you, but many of them will. It will give you guidance and some food for thought when you're considering the approval of 2024 financial statements. And by taking on board the points in our observations paper, you may preempt engagement from IAASA, and that's something that I'm sure you and your finance teams will appreciate. Moving on then to the ESMA Common Enforcement Priorities paper. We expect that to be published, I think, maybe even by the end of this week. When it is published, we will republish it to our own website. And the ESMA paper, we expect, what we know, is going to cover IFRS financial statements, sustainability statements, and ESEF reporting or tagging. On the IFRS end of things, it's going to look at liquidity considerations, going concern, and similar topics. It also looks, as we do, at accounting policies, judgments, and significant estimates. No surprises really on what it's saying on the sustainability statements. Again, materiality considerations in the reporting under ESRSs. It has some thoughts on the scope and structure of the sustainability statement, and it also makes reference to the Article 8 taxonomy regulation disclosures, which now form part and parcel of sustainability reporting. It'll also deal with tagging, or electronic tagging of financial statements, and sets out some pointers of common errors that have found across Europe, particularly in balance sheet tagging. And then finally, before we move on to questions and answers, in the slide deck that will be circulated, there's hyperlinks there to everything other than the ESMA Common Enforcement Priorities, which hasn't been published as I speak. And thank you very much. And now Barry and myself will do our very best to answer any questions you might have. Thank you. Yeah, any audience questions? Glasses so I can see you. Okay. On Slido, we have a question, which is, what can we...
Hi, sorry. Are there regulations around who can provide assurance for sustainability reports?
So I might take that one. So in Ireland, initially in the short term, it will only be statutory auditors who will be able to perform the assurance engagements for sustainability reporting. In the longer term, the department may consider whether to allow non-auditors to perform that. So some EU countries have elected to go down that route. But in the short term, for the next couple of years in Ireland, it will just be statutory audit firms. Now, any statutory auditor who wants to sign an assurance opinion will need to register separately, and the recognised accountancy bodies are in the process of registering people now. I think we have a couple of questions on Slido as well. So the first one is for both of us. So what can we expect to see in terms of publication of results, findings, good or bad practice from inspections in 2025? So I'll start, and then Maurice, if you want to add anything. So for AQU, we'll consider to publish the quality assurance review reports for the firm-wide inspection and the audit file inspections. We're considering at the moment our policy in relation to sustainability assurance review publication, and we hope to have an update on that before the end of the year. We'll also be putting out thematic papers. So later on this month, we plan on publishing a paper on ISQM1, some of the improvements we think are needed, but also some of the areas of good practice that we've observed through our inspections amongst the audit firms. And we also put out a paper earlier on this year about engagement quality reviews, again, setting out best practice and some of the good evidence we've seen on audit files, and also some of the recommendations we'd make as to how this process can be improved. So that's from an AQ perspective. I don't know, Martha, if you have anything to add?
From a corporate reporting perspective, we will publish the results of sustainability statement examinations as part of our annual activity report, but we probably in year one will not name the issuer. In subsequent years we will. So we will pretty much adopt what we already do in terms of our annual activity report for financial statement examinations, but anonymous in year one. The second thing that we're thinking of doing some stage in 2025 is doing some sort of a thematic report with some of our findings, but until we know what those findings are, we obviously can't say what the contents of that thematic might be.
Okay, I don't see any more questions in the room, but we have 2 minutes left, so there's 2 more questions on Slido we might get through. So what are the AQU inspection priorities for 2024? So at a firm-wide level, we're looking at ethical requirements, acceptance and continuance, ISQM2, which mainly focuses on engagement quality reviews, and a part of the resources section of ISQM1, which takes in staff and partner evaluation and remuneration, and how audit quality is linked to remuneration. On the audit inspection side of things, we're looking at kind of an important area for us this year has been the risk assessment work done by engagement teams, including how they've looked at the D&I of any relevant controls. And sorry, the last question. How many sustainability reports will be reviewed? What about the number of audit inspections? So I presume that means assurance engagement inspections. So we plan on looking at 8 assurance engagements next year in the area of CSRD, but we're still to finalise our exact plan and timeline for that. But from a survey we carried out amongst the PIE firms, we're expecting there to be around 20 or so entities in scope for the Wave 1 reporting in 2025, and we're considering looking at 8 assurance engagements. Okay, I think we're bang on time, so we'll end it there. So there's coffee and pastries out in the hall, and we'll come back here at 10:30. Thank you.